Good morning, listeners, and welcome to the Trade Talk podcast. Friends, let's start today with world markets. US markets are showing a roller coaster move as usual. If the general market closes well, US future prices decline. Yesterday also, we saw sharp decline in US markets on the back of weak numbers from Metaverse, that is Facebook. But again, after hours, we are seeing US futures which are trading higher on the back of strong numbers from Amazon. So it's a challenging environment for short term traders. Stay on top of your strategy and work with strict stop losses. Currently, US stock futures are trading higher, and even Hang Seng is up nearly 500 points. Bond yield is around 1.83, which is moving higher because of specific rate hike in the European markets, and dollar, which was around 97, is now trading at 95.30. So we need to focus more and more on the dollar index because that actually the main cause for outflow in the emerging markets, and yesterday it was down substantially. So 95.30, 95.25 is the current rate, and Indian rupee is around 74.6065, which is slightly positive for our markets. Crude oil is around 91, which is certainly not good, but it shows that there is demand in the economy. And yes, there are several reasons like deep freeze in US and other countries, so that is actually increasing the demand for energy, and that's the reason natural gas as well as crude prices are moving higher. If we go through with our markets, then Indian equity benchmark ended in the red on Thursday. It was unexpected that the market will close below the levels of 17,600, but it closed. And Nifty was down nearly 220 points, while the Sensex was down more than 770 points. Among the sectors, there was sharp profit booking in technology and realty stocks. Technically, after a promising uptrend rally, the index found resistance near the important retracement level of 17,800, which was coincidentally the resistance of 20 days simple moving average. And most of the time in my podcast, I always advise traders that please keep a close watch of 20 days simple moving average. And yesterday also the market opened a little lower to the level of 20 days simple moving average, and we saw some correction, but the correction was more than the expectations, and finally the market closed at the lowest point of the day. For the day again, I think 17,500, 17,450. In case if we see the market is dropping to the levels of 17,450 or below 17,500, then certainly we should look for adding some long positions with stop loss at 17,400 on the downside. Earlier resistance was 17,400, and we may see the correction up to 17,450, where the market has spent maximum time on the day of budget, and we are expecting some rebound. On the higher side, as we mentioned, 17,650 would be next important hurdle, and above that 17,800. So till the market is not crossing 17,800, the market is going to consolidate between the broader range. But the strategy should be to look for adding some long position if there is any correction during the day. Again, most of the time on weekend we always see some profit taking at higher levels, but yesterday we saw some profit taking. So today we are expecting some sideways activity with some positive bias. Tata Steel, State Bank of India, they are going to announce their numbers, so certainly the mood should remain on the higher side. That's the view. And ideal strategy should be to trade with specific levels, specific reversal formations, and it will help to fine tune your entry and exit in the market. For the Bank Nifty, again we saw some correction on the back of weekly expiry, and from there also if we see the chart, then the correction was around 39,000 levels from the highs of 39,425, but having very good support around 38,750, 38,800 levels. So there also we are expecting furthermore upside in the near term. Ideal strategy should be to look for adding some long position in financials and bank nifty. That's all from my side for the day. With this, I'm ending today's morning podcast. Thank you and have a great day to all of you.